Welcome back, and joining me for a closer look of the day's trading session is Mutooni from Sanlam Investments. Thank you so much for your time, Roy. Lots of developments on the tariff front and lots of things that we are actually looking at. So many moving parts. Of course, we did have the China and US trade talks being concluded in Sweden. What is going on there? Have the parties agreed to extend that tariff pause, but maybe just waiting for Trump to sign it off? What's your assessment of what's been going on there?
Hi, Zinat. It's one of those ones where the news flow is not very clear.
Yeah.
But I think the one definite thing is they haven't disagreed. They're still talking, and they've basically kicked the can down the line. So there isn't anything concrete that's coming out of there. I think they've extended that 90-day thing yet again. So I think it's just wait and see.
Yeah, and wait and see, I guess, until the 12th of August, because everybody's scrambling now and really trying to get to those deadlines. Well, let's take a look at the U.S. economic data. And I mean, this is ahead of the Fed's interest rate decision later on this evening. We did get another print of U.S. GDP, surprising to the upside, and of course some labor data coming out of ADP. Looking at the strength of the data that we have gotten, I mean, could there be room for the Fed to cut rates as Trump has said, or do you think that the Fed will stick to its guns tonight?
I really don't see space for a cut.
Yeah.
Based on the data that we've seen right now. I mean, the second quarter data was 2.5%. It's lower than the trend line previously. That was about 2.5. This was 2.4. But there's really nothing in the numbers that makes you feel that a recession is imminent. That economy is resilient. Labor market is softening a little, but it's still fine. Wages are still growing. They're growing slower than before, but they're still fine. So in all likelihood, what you're going to probably see is the impact of the tariffs coming through over the next 3 months. And then September is probably where you have the first live meeting. What will be interesting is if Chairman Powell indicates that or points to that or infers that at all, because that might take a little bit of pressure off him. But I think it would be very premature to cut now. All the indications are that the momentum is still relatively strong, the economy is still growing, and there's no reason to panic yet.
All right. Well, let's get into some of the company news that came out of the JSE, starting off with AECI that posted interim results. Top line softening a little bit, but the bottom line more than doubling. It seems that the international operations did the heavy lifting. Just to contextualize that half-year period for us.
So this was a bit of a mishmash of numbers. So softer top line, higher margins, but then we also saw the fact that they had a lower capital charge. Sorry, they had a lower interest charge and a lower tax rate, which supported the numbers, and their cash flows were better. So that allowed them to pay a dividend this time. They're going through a period of restructuring. They've gotten rid of some businesses. They've reclassified others. So it will take a little bit of time to actually get to the meat of what exactly happened. But I think what's quite clear is that the mining business internationally is doing relatively well. The domestic business is impacted by the domestic constraints that we have here. And the chemicals business domestically is also struggling a little bit. So by and large, a mixed result. I think new management is beginning to show results from their restructuring. But I think the one little concerning thing is that they say, yes, we may improve in the second half, but not by as much as we would have liked. Just telling you that times are difficult. Even though they're moving in the right direction, it's not at the pace they were hoping for.
All right. Well, going from a mining services company to an actual miner, Glencore, it came out with its half-year production report. Those production figures were mixed on the different commodities, but interestingly, I saw that the share rose about 2%. What stood out for you in that report?
So both copper and nickel were softer than expected, but I think the reason why it rallied was because they didn't change their full year guidance. So there's this clear expectation that production into the second half will be good. And remember, commodity prices are rising. So from a bottom line perspective, you should see that come through in the numbers. So really nothing concerning. I think by and large, broadly in line, slightly softer production, but I think the higher commodity prices should be positive for them when the day of reckoning comes, when we're looking at the earnings.
All right. Well, let's take a look at where you are finding opportunity today. Your stock pick, Roy.
My stock pick today is Pepco. You'll remember that sometime last week, their biggest shareholder did a placement of their shareholding, and I think that holding was keeping a lot of investors out of it because it was considered an overhang. Everyone knew it was going to happen, so the investment case of the business was pretty much pushed aside until this overhang was taken out. The overhang is gone. I think investors can now focus on the very solid outlook for this business. They're very strong on the discounted apparel side. Their fintech business is growing really well, and I don't think the full potential of the Brazilian expansion is priced into their share price. So I think there's still some more upside to come here. It's well worth considering for an investor looking to the medium to longer term.
Awesome. Well, thank you so much for your time and for your insights on what has moved investors' money today, Roy. Really appreciate it. That was Roy Mutooni from Sanlam Investments.